I'm making a video here that is going to show you a buying opportunity. We're going to use Target. Target just had some information back in November that I guess it was a bad earnings. I don't really know what the news was, but it dropped significantly. And now the current price has corrected almost to half of what it was from originally. From the original drop. So I am not giving financial advice. I am reviewing historical data. I use simple moving averages as my reference, and I look at multiple charts. So we are going to look at Target, and this is a daily chart. And on the daily chart, you can see just before the news broke, we were at 156.02, and within 1 day, we dropped to 121.68. So if you were in that stock, you took a beating. And then if you look at the daily chart, it went sideways for 1 day, it moved up, it got above the 2 on the second day, it got above the 4 on the second day, the third day it stayed above the 4. Above the 4, above the 4, above the 4, at the 4, tested the 8 simple moving average, and then got below the 8, and then the next 2 days, here we are today. So if you had bought once the price got above the 2, you had gotten in at 124.79, and today it's 137.51. So this is the kind of opportunities you look for when a good company has bad earnings and you have panic selling, and then you go in afterwards. Which companies it is, you have to make those choices yourself, get with your financial advisor. But what you never do is look for companies that have this great move. So that stock at one time was 241. Right here, 241.74 in one of the quarters. So would you wait for basically right here 2-3 years of moves? And man, this is a great stock. I'm going to buy it, and look what happened. I mean, it's almost half the value today. So you never buy at the peak. You buy at pullbacks. This would have been a great time here in 2018 if you bought for $65. And got out at 231. Of course, this is historical. It's easy to read the move. You would have had a nice profit. So we're going to zoom this in a little bit. So what we see here is since 2019, the price is up for 3 years, and it's down sideways, and we're sitting currently at the 8 simple moving average, just below the 2 on the yearly chart. If we look at the quarterly chart right here, the price, the 4, the 8, and the 2 are approximately at the same point. Previous quarters, we took it up. Rather, we took it down, we took it up. We took it down, we took it up, we took it down, we took it up. So this is price discovery. So what's the next move? We will know after January 1st, because that'll be a new quarter. So if we look at, let's go back to our flex chart here, and I'm going to change this to a 4-hour chart. And now we're going to look at movement over 4 hours, and you can see there wasn't a whole lot of volatility. We're positive here, we got a little negative, but we never got below the 20, which is right there, until here, and then we exploded on Friday and continued today. So you always buy low, you look for getting out at the high, you never get in at the high. So look for extreme changes. Wait until you get positive momentum before you get in. A lot of people say, oh, they dropped, I'm going to buy, and then it continues to drop. You have to get positive momentum. Let's look at the weekly chart. The weekly chart is a positive chart. And if we look at the drop, we have a week up, we have a week sideways, we have a week up. It's been 3 weeks since the drop. Now we're above the 4. And where can this go? It can go up to easily 141. That's the 8. Simple moving average. I mean, if we get below the 4 again, yeah, you have to, if you're in at this, you have to evaluate, what you want to do. But right now, this was a buying opportunity. I mean, a lot of people sold at the bottom or just before the bottom, and now they're sorry they did that. So, balance your assets so you're not in one stock. So if one does take a dive, you don't have to make a move. Anyway, you have a great trading day.